Hello, wonderful people. Here's the summary of Lecture 12, packed with valuable nuggets. Before we dive into the details of price action, I want to let you know that I'm also working on PDF notes. Check the description if you're interested. Now, hit that like button and let's get into the nitty-gritty. Starting with the daily time frame on the NASDAQ, we can see that price has been steadily moving higher, with no red days for the past 8 sessions. For new traders, it's important to remember that when the market trends in one direction, we should look for opportunities in that same direction. While it's possible to find bearish entries and take profits, you must be very precise with your profit targets, as price can quickly reverse and catch you off guard. In this lecture, ICT also addresses traders who want to hold trades for longer and capture the full daily range. He emphasizes the importance of patience and how this approach can lead to more significant profits. If you want to learn how to hold trades that could net you over 100 handles, make sure you watch this video till the end. The best part is that ICT hopes to see his son Caleb grow into the kind of trader who holds positions longer, aligning with this strategy of maximizing potential by staying in trades throughout the day. In this recent run-up, several key areas were worth keeping an eye on. First, the consequent encroachment of this order block. Once price pierced through this level, the next target would be the swing high. This is a significant level of liquidity. There was still a bit of inefficiency left in the sell-side imbalance and buy-side inefficiency. And today, that entire gap was filled. We now have a volume imbalance, which might cause some reaction at this level. However, this doesn't mean ICT is expecting lower prices just yet. For a reversal, we'd need to see significant displacement. But for now, ICT expects price to completely fill this volume imbalance. ICT then shifts to the 15-minute chart, highlighting the area where he executed an institutional order flow entry drill. If you missed the previous lecture, be sure to check it out for more details. He also discussed holding trades longer and the thought process behind sticking to a single trade. During the Of Charter mentorship, ICT often shares his high time frame analysis, and students align their entries with this narrative by zooming in on lower time frames. They identify liquidity on both sides, wait for a run on opposing liquidity, and then enter the trade. This mentorship is an excellent starting point, especially since ICT is using this path to guide his son into trading. ICT draws inspiration from veteran trader Larry Williams, who believed in buying into strength but also wondered if opportunities existed when price was falling. This sparked ICT's interest in patterns like Power of Three, which is accumulation, manipulation, and distribution, which has become a core part of his strategy. If you followed his earlier lectures, you'll recognize this concept, and this entry was below 9:30 open price after price tap into this institutional order flow entry drill. Price rallied just shy of the volume imbalance, saw price open at 9:30 and then dropped below from the open, creating relative equal lows, then taking them out after this price rallied up nearby volume imbalance. He is buying in when price drops below the price of the open. After the entry, we can see price leading to a one-sided price delivery that cleared several buy-side targets, including relative equal highs. On the 1-minute chart, the same process applies. Let's ignore price before 9:30 and observe the clean sweep of sell-side liquidity before price surged to clear relative equal highs. When trading ICT's concepts, time is the most crucial factor. If you secure an entry during the silver bullet session and the higher time frame narrative supports bullish action, don't trail your stop too quickly. The lunch hour, starting at 11:30, often sees a hunt for liquidity, and it's vital to consider who made money during the morning session. In today's case, buyers who are trailing stops. The algorithm tends to hunt those stops. The draw on liquidity should be identified by swing low before the lunch macro, and when we have other supporting factors like here. We also have the new week opening high, and the 2 consecutive candles here form an order block. Price is expected to tap into these levels. These will take out anyone who has been trailing their stop losses, and this will also entice sellers and then clear them out. ICT advises when you want to hold the traders for longer time period, then you should hold trades until around 3 p.m. before taking profits. The last hour of trading is volatile, with 4 macros that can cause price to reverse and punish buyers. ICT wants his son to evolve from a scalper into a trader who can hold positions longer. Finally, at 3 p.m. run is an example of algorithmic one-sided delivery. Many traders may have been anticipating a retracement or looking to short, but during earnings season, an algorithm often kicks in after 4 p.m. close, continuing to push price, which can be observed in the electronic trading hours with dramatic moves. Don't forget to like, comment, and share if you found it helpful, and keep an eye out for the PDF notes. Your support means a lot, and I appreciate each and every one of you. Thank you all for watching. I hope this summary of Lecture 12 gave you valuable insights and helped reinforce your understanding of ICT's concepts. See you in the next on.